Good morning, everyone. It's afternoon, but we've been here all morning, and now we're starting the afternoon period, and we're starting it with the monthly chart. It's a monthly, not a weekly now, and it's the S&P 500, which we've started out again. Unlike 2012 over here on a monthly level, once we started that monthly move, we never looked back until we got to the highs in April and had a come down. What I'm going to say is back over here in 2000 is the tops. Back over here in 2007 is where we started the monthly retracement going into the financial crisis. We are going into a calendar earning season, and we're at 5.5 year highs up here. And the fiscal cliff and everything's been done. The upper end of the range that we're looking at on the S&P 500 is that I will be happy to give you some of the catalysts that we're looking at in the S&P 500. One of the things that we're going to show on the standard chart is that at these high levels, the percent bull and bear index, meaning that percent bull index is at its all-time highs, and we haven't finished out the month of January, but we're coming up to a major wall of resistance levels. One of them that I'm going to talk about will be the 1496 area on the S&P. 1496 is that we have to get back over here into this monthly area. I will draw a couple of trend lines here. What I will do is we will find the area of 1496. It's going to be right about here. I will take out this other trend line on the top. This is an area right here on this monthly chart. When we get back into 2007 monthly topping patterns, is that we've worked all of that negative financial stuff off from 2008, and we're going to be approaching that level. There's another level that I will be happy to show. As far as if we can break above there, then we're going to draw another trend line right about here. Will be slightly below the 1506 area on this monthly trend line. And this monthly bar is 11/1 of 2007. The higher that we go within this bull run, which is getting to an overbought level and will be even more overbought on a monthly level, than just about any other time that we've called reversals in the markets as we get these extremely overbought levels. I'm going to show another level of the S&P as well, and that's going to be the 1511 area. So let's find out where that is. It's right about, it's going to be close in here. It's right about here. There's another trend line. And that's about, and there's 1511. So let me blow this up a little bit. See if I can get the numbers to come up a little bit better for you. 1511. We're talking about 1496, 1505. We're talking about these particular directional price movements, the upper end of the resistance levels to be looking at. Another one that we're going to look at, should we get anything, but just remember we're going into earnings season, but nonetheless if they continue to drive higher, we're going to be looking at another level right around 1520. That's going to be right here, 1520.92 area. That's going to be, and it's all in this monthly red bar. That's the upper end of the resistance 1, resistance 2, 3, and 4. So what I will tell people from our daily chart and our market maker platform, this is where we get those data points from, and those are going to be price resistance points in the S&P 500. I would just like everyone to know that it's going to have a wall of resistance. The higher that we climb, the more overbought we're going to get, and we're in a calendar earnings. The upper end of the target from there of that 1520 area, the real upper end, if we break through it, We're going to be looking at 1531, 1531, 1524, 1526. It's going to be this trend line right up here. And I will go ahead and get that in the video for you, MMTs. And that's going to bring us up to all-time highs. Here's 1538. Here's that upper trend line. Let me blow this all up so you can see it clearly across the tops. And just remember that each one of these trend lines represent the year 2000 area and the 2007 financial crisis area. And 1538, there's 1530 in there before we get there, and it's all going to be dealt with this whole area right in here. So there's another monthly trend line. If we continue to go higher and the broader markets want to look through the earnings season in the S&P on slower growth, that's fine. But here's what we're looking at, and it's very accurate, and it's going to be 1544 right up above here. It's going to be this line. And we start getting into this big bar right here. So here's the top of the reversal bar. This is a monthly chart. That's a long ways to go right now because the S&P closed at 1485. But remember that the low starting January period is 1426. Okay? What I will say on these support and resistance levels at these major highs is this is going to be the one that's really going to be playing the course right here. And basically, we have to get through this, but each push higher through these particular trend lines right here, starting right below the 1500 level, and then working on up to 1505, and then 1511 here, and then 1520 right in here. Now, there will be another point that we would look at, and that's going to be 1526, and that's going to go somewhere, well, 1530, but 1526, let's see, 1526 is really, let me take out this upper trend line. There's 1528. So slightly above that by two handles would be a blow off. Going through these resistance levels to get here is going to make the monthly S&P 500 index that much more overbought as we go up in these monthly trend lines. Now, we're currently in an overbought cycle. One of the things that we want to be coherent about is the earnings cycle. There's going to be volatility. And each time that we break up to higher levels, it's going to be that much harder to get through the upper end of those resistance levels, and we will have pullbacks at some time. We'll be happy to keep you updated on this specifically. There is a certain trade management that will happen. It's going to be volatile this week. We start trading on Tuesday. We got Apple, Google. We got lots of S&P 500 earnings that are going to be coming out that will affect this. And if they get a good call on it, they will run it higher up to these resistance levels. But we're going to have to get above that 1505 level to make any real movements to get up here to these other resistance levels. And these levels all go back, once again, to major tops that are all done over here. And, you know, I could have 30 different people give me 30 different interpretations about this, but this is all done on mathematics. And it's done using our system. That's the upper end of the current levels going through this big red bar right here. Starting 1, 2, 3, all these price points on the upper end of the resistance of the S&P 500. It's going to be extremely volatile. The dip down, and we're getting toward more of a top in a short relative period in January. Meaning that, yes, each time we go up, it's going to get harder and harder, but there's going to be some reversals, and there's going to be some reversal volatility in these markets during the calendar earnings season. I've mapped it out for all of my MMTs on this particular monthly bar right here that goes back to the financial crisis in 2007. Big reversal bar right here. This is that monthly reversal. And now we are going to go up, it looks like, and we have to clear those areas. You got to get past 1496 to get to 1505 and right below that 1500 level. And these are those last monthly bars that went back in that time frame. Remember, the calculations come from our platform, not the standard chart.